Hi, ladies and gentlemen, it's Aaron Fregnito, your host of the Passive Cash Flow Podcast. If you're enjoying our content, be sure to hit that like button and the subscribe button. And I'd love you to share this content as well with someone who you think would find it valuable if you're enjoying our content. We come out with a new podcast every single month. So right now we are doing an announcement for PCG here, very exciting new announcement that we will be accepting 1031 capital in the very near future. Now, for those of you who don't know, a 1031 tax deference or a 1031 tax exchange is a way where you can sell an asset and defer the capital gains from the sale of that asset. You can do this most commonly with real estate, but it can also be done with other assets like airplanes and so on. But what we commonly find is people that own real estate are looking to sell the asset and get into take that capital, the proceeds from the sale and the initial investment they made in the property, take that capital and then move it into an investment that is passive for them. Because as we all know, real estate is kind of a management intensive asset class. It's not like owning a mutual fund. When you own a piece of real estate, say a 6-family in Jersey City, New Jersey, and you're managing that asset, you're on the hook for the calls day to day. Even if you have a management company in place, you're still managing that management company. So a lot of active investors that have built a decent portfolio, actively investing in real estate, often find that they've built some nice amount of equity in their properties, but if they sell their property, they're going to have to pay capital gains tax on those profits. So what most investors tend to do is a 1031 tax deferral or 1031 tax exchange, and this allows them to sell the property. They have about 45 days from after they sell the property to identify 3 like-kind properties to exchange or trade into with those proceeds, and then they have 180 days from that point forward to complete that transfer, to close on that next property. Now, the challenges with many investors is they really don't want to actively manage real estate anymore. So one of the more attractive possibilities that people are doing these days is doing a 1031 tax deferral and trading that capital into a passive investment where they can continue to earn cash flow and equity growth and the benefits of owning real estate as well, such as tax depreciation, but not have to manage that asset day in and day out. So that's what we do here at People's Capital Group. We have passive investments for people where they can invest in real estate passively. And most of the time people are self-directing their IRA or investing their hard-earned capital into apartment buildings here in New Jersey that we manage with our in-house management company or team up with a development company and build a new asset. And those investors are passive investors enjoying monthly updates, quarterly financials, and quarterly cash flow distributions when available. So what most investors cannot do is accept 1031 capital, but now People's Capital Group can accept 1031 capital. So that allows people to do that exchange of equity in a property, sell that asset, take the cash from the sale of that asset, exchange it into our next opportunity we'll be presenting to investors over the next 90 days here at People's Capital Group. And what we're targeting with this next property is a 10 to 15% internal rate of return. We'll narrow down those numbers as we get closer on this asset and begin to line up all the details for investors to 1031 into the opportunity. We're also targeting about a 4 to 8% cash on cash return. So this property produces very strong cash flow as well. So this allows investors to get a quarterly cash flow distribution between 4 to 8% a year, and then equity growth as well, and exit options every 5 years. So investors can then 1031 into this opportunity, enjoy quarterly cash flow, build wealth passively with monthly updates, quarterly cash flow distributions, and then exit at year 5, cashing in that additional equity growth that's happened over those years, or remain invested and keep enjoying quarterly cash flow payments. So this is a great option for people that are looking to do a 1031, looking to sell a property, tired of being a landlord but own some assets. Our minimum investment amount will be $250,000, and there'll be priority given to investments of $500,000 or greater. But if you are a landlord and you own property and you want to learn more about this process, then I'll put a link in the description, and you can schedule a call with me, Aaron Fregnito, to learn more about how we help people passively invest in real estate, and the details of this 1031 tax deferral option we'll have coming up shortly. So over the next 90 days or so, we'll be finalizing the details of this investment, teaming up with very experienced builders, developers, and managers in the real estate space. So investors will be able to passively do a 1031 tax deferral and passively invest into this opportunity, earn cash flow, equity growth, and tax depreciation over time with exit options every 5 years. So this sounds like something that might be interesting to you. Let's schedule a call. I'd love to get into the details, understand your investment goals, and hopefully help you multiply your wealth over time through high demand North Jersey real estate. Also, like I said earlier, if you're enjoying this content, please like and subscribe. If you want to share with people in your network, maybe owners of real estate that would find benefit in doing a 1031 tax deferral into a high demand North Jersey apartment building, then please share it with friends or people out there that you know, other landlords that would possibly be looking to do this. We're going to be accepting just a handful of investors into this next opportunity. It's about a $6 million raise in total. We already have a handful of investors lined up, and we're just going to be filling up kind of a few extra spots in the raise. So at this point, we are filling up these spots very quickly. So if this is something that seems of interest to you, even if your property's not on the market yet, but you're thinking about listing your property, let's connect now. Let's talk about the details so you can set up those next steps to properly do a 1031 tax deferral into a passive real estate investment opportunity. If you have a property on the market, even better, then you definitely want to be determining how you're going to do this 1031, what you're going to be investing in next. If you already have done a 1031 and the capital is sitting with a 1031 intermediary, then you definitely want to connect with us as soon as possible, because you, of course, have that 45-day period to identify the next like-kind investment you'll be investing into, and then 180 days thereafter to complete that investment. So in all these scenarios, let's connect as soon as possible. My name is Aaron Fragnito. Thank you so much for listening here to another episode of the Passive Cash Flow Podcast. For more information, you can always go to our website, peoplescapitalgroup.com, but check out that link in the description to schedule a call with me. Let's talk soon. Have a good day.